Hello everyone, I hope you are all having a great week. My name is Drew, the host of Never Behind. If you have been in the market since 2021, there was a great hype on the EV sector and stocks, especially after the rally of Tesla going over 10x in a very short period of time. However, most of the EV companies, including Tesla, has come down substantially in 2022 and 2023, and some analysts are saying that we will continue to have a meltdown in the EV sector. Now, in this assumption, the analysts were also including Tesla and saying that although they were very bullish on Tesla in the long run, they think there still may be a meltdown in the EV sector that will affect Tesla's stock as well. In this interview, the analyst not only shares the rationales behind his theory of the EV sector meltdown and why Tesla may also go down, but at the end also shares what types of stocks he thinks would be a great investment regarding the EV and self-driving industry. So with that, let's see what the analyst had to say. Now again, before watching the interviews, I wanted to share that Moomoo is having a great promotion, which I think no one should miss, especially in a tough market like the one we are in. So if you are interested in getting these 15 stocks for free, make sure you click the link in the description below. I have also started a Discord that is 100% free and have great investors in the group regarding stocks, options, swing trading, chart analysis, and even cryptocurrencies, sharing their ideas on opportunities for investments every day. So if you are interested in being a part of the community, please click the link Discord in the description below.
A meltdown, not just a slowdown here, Emmanuel. Why are you so down on these EVs?
I think the slowdown is in the EV adoption. So essentially people are adopting EVs slower than expected. The meltdown is in corporate companies and investor expectations. Essentially, companies had planned massive investment on the premise of much faster adoption of EVs. This is not playing out. And now we're hearing from corporates that they're pulling back or canceling altogether these investments. Just last week, Ford basically said they're not going to spend 12 billion out of the 50 billion they were going to spend in EVs. GM has pushed out a second EV factory by about a year. It is essentially a real meltdown of expectations, which has resulted in a meltdown of stock prices.
What could change that picture? I would think way higher gas prices might change that picture, for one thing. More affordable EVs might change that picture for number two. Am I on the right track there?
You're definitely on the right track. Affordability, I think, is the name of the game. And this is what's crucially lacking from EVs right now. EVs are more expensive than their counterpart on the combustion engine side. And the early adopters basically didn't care and bought them. But now the average buyer is essentially saying, why would I pay 10, 15, 25% more for the privilege of driving an EV? And so there's a lack of affordable model of affordable EVs. And that's something that unfortunately we feel will take some time to be corrected. The very reason why GM is saying, hey, we're going to take a pause, slow things down, and then maybe issue these new models later on is so that they can essentially try to work on lowering these costs and then come out with some cheaper, more affordable model. But that will take some time, probably another couple of years. Even Tesla, frankly, and you know we're long-term bullish on Tesla, but even Tesla is essentially struggling with affordability. They're lowering prices consistently, and they're really not going to have a more affordable model for another couple of years, probably at the earliest.
They've really lowered the price on the Model X, which was a high price model.
Now, as this gentleman has mentioned, I do agree that the EV price has been higher than the combustion engine vehicles, especially for the Tesla's Model 3, Y, X, and Model X, and that affordability is one of the major issues that the EV sector needs to solve. But I do think Tesla is really working hard on getting the price down with developments in technology and their gigafactories being able to produce in large scale, and is still the leader in the EV space, not only dominating the amount of Teslas that are being made and sold, but also in regards on lowering their price of producing a vehicle. Now, additional to the affordability and price of an EV, I also think one major concern that the majority of people have is the infrastructure of the EV charging stations. Let's see what the analyst had to say about the concerns over the immature EV charging infrastructures and networks.
I am a non-EV owner, and I have to admit it makes me nervous to have a car that I know that I need to find a place to charge, which might be harder to find than a traditional gas station. Is that still a worry, or am I in minority?
No, absolutely. It's still a real concern. I think that a big piece of driving EV adoption is going to be able to essentially address some of these concerns. Tesla has done a really good job at it. Obviously, the network of Tesla charger is very, very dense, and so you don't have to worry about it as much. It's even integrated in your GPS where you should stop and recharge. But for just about every other EV, the network hasn't been as dense, and range remains a real concern. In the end, what it boils down to, though, is will people sort of like take that step, make that bet when it also costs more money? And so all of it needs to be addressed. I think affordability is probably going to be the biggest lever.
Now, as we just heard, the analyst was saying that the EV charging infrastructure is a major issue, but is being solved rapidly, and that Tesla, again, is the dominator in the EV charging network platform as well. He's saying that there definitely needs more improvements to be made for the EV charging stations, but will eventually get solved very soon, and still thinks that the bigger problem is adoptability and trying to make EVs more affordable to the general population, which I also do agree on. Now, at the end of the interview, the host was asking where the analyst thinks the best stocks to invest in would be in the EV and self-driving industry. And these were the types of companies that the analyst was suggesting.
If I am interested in investing in the automobile sector broadly defined, am I wiser investing in a company that is sort of powertrain agnostic? In other words, that makes the seats, the side panels, the gear shift knob, the OEMs, the manufacturer?
Absolutely. And that really is, our thesis here. It is incredibly difficult to make a bet now on the powertrain mix because it's really heading in the wrong direction and it could be extremely costly. If you can identify some names that are powertrain agnostic, but that have good secular growth from an adoption curve for their technology, then you can really have some incredibly strong revenue and earnings growth almost regardless of the powertrain mix. One of the names we often speak about is Mobileye. Mobileye is essentially a pure play on autonomous driving. They don't really care whether that technology goes into an EV, whether it goes on a combustion engine. It's all about will cars become more autonomous. This is a good example of what could work almost regardless of powertrain.
Now, I do think that both the host and the analyst made a great point, saying that finding companies that produce parts or services that can apply to both EVs and combustion engine vehicles like Mobileye would be a great investment. But I also do think that no one knows which company will be the leader in this space or even survive in the future, since I still think the EV industry is fairly new, and these companies not only need to prove themselves, but also need to stay on top of their new competitors. So following up on the companies that you invest in, looking at their 10Ks, 10Qs, earning calls, and partnerships with other companies are very important. And I also think that you should be very careful if you are betting a lot of your money on one or two stocks that you think will 10x in the future, just because it is in a sector that will grow substantially. Now with that, I hope this video was helpful and also hope to see you on my next videos.